watching Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions today, Ricus from PSG Hole and One Ruimsig, and Graeme Körner from Körner Perspective. Be sure to send your questions through via email, stockwatch@bdtv.co.za, SMS 41392, or on X, Business Day TV, using hashtag Stockwatch. Gents, appreciate the time. What should have been a nice gentle Monday, maybe a whole lot less so. Graeme, let's start with you. So the trade wars are now official. They go into effect tomorrow. Canada and Mexico 25%, China 10%, with the Canadian energy apparently also only at 10%. Your response to it, I mean, the market certainly has sold off and looking weak on it. Is this a buy, a sell, a hold, a hide under your bed? How are you managing this day one of trade wars?
Simon, I mean, the way I was thinking about it earlier today is the Trump administration almost feels like the presidency in a time of global war. It's almost like shock and awe. I think myself included, we sort of thought, well, there was lots of rhetoric, and the rhetoric was really to get people to the table. Mm-hmm. Why he started with his closest neighbors, who they are very integrated with vertically, with supply chains in critical industries. Only Trump would know. But I think the net effect of all of this is it's going to be inflationary, and that probably doesn't all go very, very well for certain asset markets. But personally, I think this is a shock and awe tactic. It's really designed to put opponents, be they friend or foe, on the back foot, and to drag them to the table. I'm not entirely sure it's going to work, because at the moment it is the US against the world. He was saying, the EU is next. Yeah. And I know you've seen, Canada and Mexico already respond in spite of the threats that if they retaliated, additional tariffs would be put on. So, I remember I think it was Economics 2A, they taught me that nobody wins with tariffs. And I think particularly today, in such an integrated world, it does risk pushing quite a few economies into recession. Ironically, you sort of feel, although we haven't escaped the attentions of the president, you do sort of feel you're probably better off being on the southern tip of Africa, where we're somewhat insulated from a lot of these things. But notwithstanding that, it's tough. But I think on balance of arguments, I would say it's probably not going to last for too long, and we'll learn to deal with it. But there'll probably be some really good opportunities in the next week or so.
I take your point on that. Ricus, your take on this? I mean, it was promised. Maybe we hadn't expected it quite so soon, and certainly I don't think we'd expected it on their immediate neighbours. How are you sort of responding in portfolios?
Yes, I agree with Graeme as far as the short-term inflationary effects are concerned, and whether it be locally or in the US or anywhere else. And I also know that the viewers don't really want to talk macro. They want to know where to buy Sibanye or whether to sell Sibanye. But we have to take a look at macro. And I think one has to start off from the point that Trump is not an event. Trump is the outcome of a process that's been going on for, I think, since about the great financial crisis. Yeah. Your neoliberalism system that's been based on things like Bretton Woods and the Washington Conference and the Uruguay round, which instituted things like the International Monetary Fund and the World Trade Organization and the US Security Council. That system is breaking or has broken down, and nobody has set in place a new set of rules. And that new set of rules has to, it's got to happen, because, as I said, Trump is just what follows from that process. The fact that tariffs is part of that process. Doesn't say we're going to go back to mercantilism, but something else is happening. And one has to adapt to that. It's not going to go back to the way it was before. Something new is in place. How do you handle that if you're sitting with a portfolio of equities? Don't second guess. And this is just my process. In other words, do what the price of whatever you hold is telling you. If the loss becomes too severe in your portfolio, reassess, how that company is going to be affected. Is it just panic that's causing a sell-off? Is it real? In other words, is there a real problem with a company exporting to the US, for example? Then that's going to catch your attention. It's not very decisive steps, but you have to react according to what the market is telling you, I think, broadly speaking.
I take a point, and I like your point you made there, Ricus. No new set of rules yet in place. They will hopefully come in time. Does that then bring, and you make mention, respond to what the instrument is telling you? Gold hit all-time highs last week. Gold, therefore, a place in a portfolio, Ricus?
I've been on this program for probably about 25 years, 20 years. I think it's the first time I'm saying, yeah, it's probably got a place now. It probably has a place in your portfolio. And again, if you want to do gearing to the gold price, then a gold miner has got a place in your portfolio. I think one has to be very sure about where that gold mine is located. South Africa is probably not a very good place at the moment, considering the special attention we are getting in amongst the developing economies.
Yeah,
absolutely. Graeme, gold?
No, I think I can understand the appeal right now, because if you look, even crypto, Ethereum down 20%, Bitcoin itself is down 7%. So it's kind of, there are no winners, but gold actually holding its level. So in a time of complete confusion, one where there probably is inflation in the system, I would argue there's a better than average chance that the gold price goes up over the next while. Whether it goes to 3,000 or goes to 3,000 in 6 months from now is at 2.5. I really can't tell you. It's run very, very hard. My sense is that there is probably some of this new world order thinking probably having been baked into it, together with some traditional supply and demand issues. But I think my personal view is it's run quite hard, probably in large part on the chaos that we've seen in the global economy. So I wouldn't personally rush out and buy gold now, because it's, it seems like it might be the one harbor in the storm. I think, we're obviously trying to get our heads around who's going to be affected, how long this is going to last. I think, I was watching something earlier today on one of the business channels, and one of the global heads of equity put it beautifully. She said, eventually economics will win. And I think that in Trump's mind, he's going to bully everybody. He's going to get what he wants. The core issue, and I think this is something that I wish somebody could explain to him. The core issue is that America doesn't produce enough and it consumes more. So the problem is actually a domestic one. It's an attitudinal problem, rather than, it's not like Europe is responsible for the trade surplus that they're running with the US, or Canada for that matter. It's about the structural makeup of the US economy. So I don't think Trumponomics is going to change that. And I think in the short term, these tariffs are obviously going to be very chaotic, and certain businesses and certain industries, and you've seen, for example, pharma and biotech and technology and the likes of Diageo in Europe getting hit really hard today, and it'll probably play out for a little while longer. But I do think at the end of it, the dust will settle, and Americans will carry on buying, Johnny Walker Black from Diageo. So, I think what we must be careful of is to assume that the Trump administration is going to carry on with, chaos upon chaos, because eventually it'll actually come back and bite them, and it's going to hit their consumers. And I always say it, US GDP, 65% of it is the consumer. You don't want to put them under pressure. You don't want to create anxiety there. So I think at the moment it's a strategy of trying to strengthen a negotiating position. But, if it's held for too long, it's going to become very damaging, and not just to the Canadians and the Mexicans and the Chinese. It's going to hurt America and everybody around the planet. Yeah. So I do believe that sense will eventually prevail. But the question is whether it's going to happen tomorrow or in 6 months' time. But I think Ricus does make a very interesting point, and that is that you've seen, what I call the pragmatic center in the world, the people who get things done, they seem to have disappeared. You've got, quite a big jump to the right and a jump to the left. And I think for the reasons that Ricus so beautifully put up, that, Trump has already withdrawn from the WHO, he's already, given up on the Paris Accord. So there are going to be quite big vacuums. And ironically, I think the net winner of all of this confusion will be China, quite frankly, because they'll step into the breach. So, it might be a case of a very noble idea, but it could actually just strengthen the position of Xi Jinping and the Chinese people, as opposed to what everybody thinks the strongman's going to do. Anyway, enough.
I take your point, unintended consequences. Before break, Ricus, question coming through about Nampak. Sold their BevCan, 1.2 billion, 1.3 billion rand will be arriving in their account fairly soon. Ricus, Nampak looking attractive to you?
Price-wise, yes, it does. I mean, heck of a turnaround story, and considering what management have done, hopefully extrapolating to the future and saying that they are going to keep on doing well. I think in as much as it focuses on what's happening locally and not dependent on what they need from offshore, I think it's as I said, technically it looks okay, and certainly results-wise the same.
Graeme, we've got a minute or so before break. Nampak, I mean, when I was learning markets, you always bought these sort of stocks in rising GDP because it just gave you an uplift. We don't much have that. But would Nampak be on your list?
No, it wouldn't. I think the South African, particularly the South African packaging market, which is still kind of core, is a very, very competitive one. You've got a few very powerful customers. If you want to be in the packaging space, and I do understand Mondi is going to be hurt probably by these tariffs, but I think Mondi is a very, very well-placed business for a variety of reasons, and it's come off quite nicely. So it's not the sort of massive turnaround story, but I think, global market, very well positioned in terms of product development, etc. So, if you just ask me, do I want to be in Nampak? I'd say probably not. I'd rather be in Mondi, which I think has more levers that they can pull. And is less dependent on SA GDP and a few customers, I would argue.
Gents, Vodacom, I'm not a giant fan of telcos. The update this morning certainly got the market interested. Graeme, Vodacom as a potential inclusion to a stock. The question coming through was, market loving it, I'm holding. Do I carry on holding?
Well, Simon, I think you and I probably have the same hypothesis. That the traditional telcos, and I do understand that they're obviously pivoting into financial services and fintech and so on, but at the core, these businesses still sell airtime and they sell data, and I think both of those is going to be considerable downward pressure. So no, I'm not mad about the traditional telcos. I think what you've got here is probably still the combination of the old model and some of the new model. But I don't think the new model is going to contribute nearly enough to make up for what they're going to lose in ARPUs and things. And you just have to think, I mean, if somebody like Starlink, and there are obviously issues around that, but if Starlink were to list in launch in South Africa, it would be hugely disruptive to guys like this. So, we've said consistently, it doesn't matter whether it's Telkom, MTN, Vodacom, we'd rather sit them out. For clients, we hold them indirectly through, we hold RAIN indirectly through African Rainbow Capital, which is about as close as I want to get. And if you want to be in the fintech space, you've got a company like Optasia, which you can't get directly, but you can get through, an Ethos, for example, which I think is a far purer fintech play. So, yeah, I'm not mad about the mobile telephone operators.
Yeah, ARPU. I remember when it was all about ARPU and then the numbers started to fade. They stopped using it. Ricus, Vodacom for you?
Yeah, I totally agree with Graeme long term and possibly with you as well, Simon, as to the prospect of that telecom sector. That being said, Vodacom is going up for the first time since start of January in 2022. So there is a bit of a price run on the go. I think a lot of that had to do with the performance of the Egyptian sector, where there was a huge increase in fintech in Egypt. So it certainly looks that kind of good news looks more stable than, for example, Nigeria and MTN. So if I were a holder for Vodacom, I would be taking a look to probably offload it at a decent price. And again, just taking a look at a graph, that decent price is somewhere between 115 and about 130 Rand, if I'm reading that correctly. But yeah, longer term there, I think just a normal cell phone company, doesn't really matter in which service you are, probably better sectors to be in, as Graeme quite correctly says. Starlink will not only disrupt South African service, it could even, same in Egypt. So it's such a huge variable that I'd be very careful.
Yeah, and of course, we could go into other markets into which they operated. Ultimately, they're utilities with giant capex spend. Capitec, a good trading update. Actually, I take that back. I got a 28 to 32% increase in HEPS is, I think, probably an excellent trading update. Stock is below 3,000. Ricus, question is, good update, worth buying some below the 3,000 level?
Graeme, you're the accountant. Just on the price, and again, just looking at a chart, it's at a level where it was last about 2020, 2021 or something like that. It's just above its 200-day moving average. That doesn't happen a lot. If you like Capitec, technically I would be buying it right now.
Actually, I hadn't spotted that moving average 100%. Graeme, Capitec for you?
Look, I think, we've got a very simple view on things, Simon, as you know, and that is, companies have to deliver the type of, or almost for a reasonable period of time, need to deliver the earnings growth that will unwind the PE to a sensible level, if it's not currently on a sensible level. So if I look at this one, I think it's sitting on about a 33 PE. You deliver 32%, you know what, you're unraveling that PE at a reasonable rate. The question, though, is how much of this is now the one-offs that have, the old provisioning, etc., that have been turned around. Mm-hmm. If I look, for example, at the business part of it, I think they're making good progress. But again, that core business was still, I don't want to call it micro-lending, but that was the core of it. And to replace that with other stuff that is as profitable, I think will be very, very difficult. So the market loves it. I mean, clearly, you could buy 3 other banks. In fact, you could probably buy the big four banks for the same multiple in aggregate as you pay for Capitec. It's silly, but there's a point to it. I don't know if there's that much market and that much earnings to be extracted, because at its core, even with the big business banking, for example, taking on, PPP funding and stuff like that, that's a different league. You can't move easily into corporate banking and stuff like that. So for me, I've always sort of felt it was one I battled to get my arms and head around. But the balance sheet's not a problem, massive amounts of capital. So I know some guys are very worried about it. And I don't agree with that view. I think they have enough headroom just from a capital point of view. But I wonder where the future growth is going to come from. But clearly, they have captured the imagination of their investors and the market. So who am I to fault them? But I'd rather just see over the next 2-3 years whether those earnings growth rates are anywhere near sustainable. And my sense is they'll moderate. So I would probably just sit it out.
Yeah, and I like your point. I mean, the PE and the growth is about the same, but how true is that PE? We'll find that out in a little while. Graeme, to stay with you, a question came through, and this came through before the other news, which was all around the tariffs and everything. Load shedding, I know it's only for a weekend, but does this affect sentiment in that it shows that we're not completely out of the woods? And I think that's a fair comment. We ended up with about a day's worth, but I think it just reminded us and perhaps the rest of the world that, hey, load shedding is perhaps not as gone as we had thought.
I think it was, I think generally Eskom has done a really good job at keeping us, 300 days. Mm-hmm. So, if you say 1 day out of 300, I think that just was a problem with 4 generating units that obviously happened at the same time. So, and coincidentally happened the day after NERSA rejected it.
Well, yes.
You're a conspiracy theorist. But no, I think the challenges that we had around Eskom, where we had stage 4 every other day, and often stage 3. I don't think that that's really the scenario. And I think one of the reasons is, a lot of people have actually moved almost independent, and that has taken demand out of the equation. We can debate Eskom's financial future with some of their paying customers leave, but the reality of it is, I think, simply from a supply and demand situation, it's probably looking a lot more stable than it has. So no, I'm not. We were all irritated and a little bit disappointed, but I think it's that problem is solved now. Real problem is water.
Yeah, water, which I didn't have this weekend either, and you can take my power, but please don't take my water. Ricus, I want to move on to Merafe. Question coming in around Merafe. Stock under serious pressure. What's the story? They had a sense this morning. In essence, they're not sure their ferrochrome plant is viable. I look at that story. I look at this. I mean, I don't know. I would not be a buyer if I were a holder. I would be a very worried person.
Yeah, I haven't looked at it in a long time. I mean, it's dependent on what Glencore wants it to do, whether it now wants to pay out dividends or close it down or whatever. It's really under the control of Glencore. It's a single metals company, and as you've said, if the demand is down, they've got to close down smelters, otherwise open it up. If the chrome price runs, wonderful. You'll see the stock run, but the chrome price isn't running. Steel demand is not anywhere near bullish territory at the moment, as far as I can see. Therefore, it affects Merafe. Therefore, I wouldn't be holding it.
Graeme, a quick question for you. You mentioned African Rainbow Capital. There was a question that came through last week around it. They've got some good assets in there. Rain, to me, the big asset is time and the ultimate listing of that. Is it still looking at attractively valued? Certainly, last time I checked, it was chunky a discount to admittedly their net asset value.
Yeah, so I think Rain is African Rainbow Capital is one of where people are very polarized. A lot of people hate it like the plague, and others, think they all walk on water. I'm sort of more in the latter camp. I think Rain has done a good job in spite of what I was saying about the telecoms. I think they've sort of carved out a niche in there, with 5G spectrum and things like that, and positioned themselves well. So I think they're also one of the reasons why we're quite bearish on the traditional telcos. But whatever the valuation is of Rain, if you don't agree with 2.5 billion, then lob 500 million or $1 billion off it. I agree with you. I think time is and I suppose in a way when people ask me about Capitec, I say, well, here's a business that was able to launch a fintech business, launch a similar thing in Southeast Asia very quickly, some real traction there. So I think time is going to be a phenomenal story, and there are lots of other really good assets, which is where I disagree with some of the those in the camp who hate them like the plague, because I think even businesses like Crops and others, there are actually some really nice assets, and I think the financial services portfolio one day that thing will be put together and it'll be a proper powerhouse. So whatever you back off.
I'm going to stop you there because you need to go stop picks, but I take your point. I typically lob $1 billion off Rain, and we still get to some value. Ricus, your pick today, Pepkor trading update this morning, looking good.
Very positive when compared to the other retailers. The fintech sector keeps on gaining ground. I think it doesn't really matter what happens with the world. South Africans tend to be good at lending each other money and also selling stuff to each other. And Pepkor is really doing very well in that respect. I'm not saying it buy today or even this week. We all know what state the markets are in, but if you can pick it up at a reasonable price, I think that's a retailer to go for.
Yeah, absolutely. And that fintech business, I think Flash is sort of creeping up and doing great. Graeme, 91 is your pick.
Yeah, it's a little bit odd in this world, and I would agree with what Ricus is saying. I mean, you don't want to fill all your buying orders today. I think you'll have an opportunity over the next while. But if you look at this business, it's got 3 trillion rands worth of AUM. If we get a bit of inflation, the reality of it is cash and bonds are not going to offer you a shield. So I would imagine that equities, which I think is probably more of their niche and where they lost some AUM over the last year or two, augurs well. But I think the forward multiple's about 8.5, if I remember correctly, and the dividend yield's about 8. So even if you're not a wildly optimistic is global bull market fan, I think you're being compensated very, very nicely. And that 8% dividend yield also factors in some of the difficult environment that they've been operating in. So I suppose what I'm saying is I think asset markets globally, particularly maybe some of those like the UK and Europe, which they're obviously in record territory, but they've had a very dull 5 years. Those markets do well. I think a company like this could do well, but I'm saying it's a cautious way of playing a bull market over the next few years. But I do agree with Ricus. I think you want to just be a bit patient as you buy.
Yeah, and you get paid 8% to hold it, which is never shabby. That's all for Stockwatch today. Thanks to our guest, Ricus, PSG Hole in One Ruimsig, going with Pepcore, Graeme Körner from Körner Perspective, going with 91. Up next, the close. Stay watching.